Your market news now. Asian markets sought to take their cue from a rebound in US markets, with Tokyo and Hong Kong stocks starting the session with sharp rises. By the end of the day, regional bourses either closed in the red or slightly up. Tokyo stocks edged up in volatile trade. They suffered massive losses on Monday, down over 4%. However, today, the Nikkei share average rose a mere 0.2%. Hong Kong stocks had a good start but ended the day in the red, the Hang Seng Index closing down 0.9%. Despite oil prices maintaining their gains, energy firms saw a sharp sell-off. In China, profit-taking continued ahead of the Lunar New Year, with the Shanghai Composite Index dropping by 1.8%. And over in the United States, Wall Street stocks closed up with solid gains after a roller coaster session. This followed huge losses on the previous day. Many analysts believe the correction that took place over the last few sessions was necessary, warning that further volatility could be on the cards. The Dow Jones Industrial Average rose 2.3%. The S&P 500 closed up 1.8%, while the Nasdaq Composite Index jumped 2.1%. Well, global equities markets are seemingly trying to stage a comeback after the bloodbath of the last few sessions. The all-share index is slightly in the black, with financial counters lending key support to the bourse, those being up over 3%. Meanwhile, other sectors like mining and industrials remain firmly in the red. Despite an uptick in the gold price, mining counters are also in the red. The local currency is firmer against the US dollar relative to yesterday, with some attributing this improvement to local political manoeuvres as market players bet that President Jacob Zuma's days or even hours in office are numbered. Meanwhile, the Reserve Bank has reported that the country's net foreign reserves rose by over 660 million rand in January, the accumulation of which may have been helped by a relatively stronger rand. Let's take a look at the indicators. Well, I'm joined by Makwe Masilela. He's from Makwe Fund Managers. Thanks for joining us, sir. Pleasure. Seemingly, global markets trying to make a comeback, a recovery, but can we expect more volatility before we see some stability?
By all means, one can easily see that what happened yesterday, especially in the US, as more of a dead cat bounce, because as we're talking now, I mean, the US, the Dow looks as if it's going to open down almost 300 points. So that tells you that what we've seen yesterday is not too much to read about. Then our markets as well, yes, we know European markets at the back of what happened overnight in the US, it was just okay, but not too convincing. And yes, we still have earnings to see, but most importantly, we still have two most important Fed governors who will be speaking, and the one to look at is mainly the one from the New York, so that can help or make volatility to still be in play. And I think it's more of a wake-up call. We've seen how the markets have gone up over since last year or so, and worse even the beginning of the year. And our markets back home, unfortunately, we are down, and mainly because of a stronger rand. As we know, you get the likes of Nespas, the likes of Richmond being negative because they are more of rand hedges, and they tend to benefit only when the rand gets to be weaker. So yes, I see this, that there's more volatility in play, and there's still a lot that needs to happen to correct the whole thing. Some fundamentals are convincing, especially if you see some earnings. But yes, I think the better part of what helped the markets go up, it was more of, people have faith and hope. And we don't trade on hope or faith.
No, you don't. Now, assuming that we are closer to stability, particularly on the all-share index, and given what you know about the prospects for economic growth in the country and everything else, what stocks do you think it would be an opportune time to try and pick up? Because obviously all of them declined at this time before they rise again.
I think our problem, especially, globally, I think we've got this whole thing about inflation. I think we're too obsessed about it. The US, they're looking at 2%. Back home here, we've got our 3 to 6% target, stuff like that. But if things pan out the way we think they will happen, like we've seen the rand strengthening, and people are be confident about our economy. We've seen that as well from the business confidence that was released yesterday. Then companies which what one can call South African Inc. companies, which are more focused back home here, they will tend to benefit. And we've seen that happening already with our banks. They are doing very well. Our retailers are well. So I think those are two sectors that one can look at if the rand will continue to strengthen and the confidence continues to increase.
And speaking of more good news, although when you compare it to China, it's really not that big of a deal, but the Reserve Bank telling us that our foreign net reserves have risen by 660 million rand. I mean, what are your thoughts about that? Is it really an effect of the higher gold price or an effect of the stronger rand during the period? What's your thoughts?
It's more of a play of a stronger rand, and we expect that to continue, especially what we have seen with the rand doing now. But now, for the fact that we might not get news, about what's going to happen with the political thing, the rand might also continue to be in limbo. But for the fact that it's below 12 rand, the chances are, if what the markets are expecting about the news that President Jacob Zuma will step down, then we can see some nice knee-jerk reaction. The rand can go as low as it can, what is 11.50 or 11.84, it depends, but thereafter it will stabilize, because I think more of those news are already priced in the rand.
It's almost 13, 14 hours ago that we heard that an understanding had been met between the two presidents, one of the party, one of the state. But no major announcements have been made, and markets are very sensitive. How is it that the rand has managed to continue trading below 12, given this political limbo?
I think we see that as more of a positive, and given that the dollar itself is strong, I mean, the rand should be more than 12 rand, but we see that more of a positive that is imminent, that Mr. Jacob Zuma will resign as the president of the country. You are right. We're expecting to get the news at least early this morning or so, but, for the fact that the way things are unwinding, markets are reading as definitely he's going. The question is when.
I'm in a very positive mood today, so I want to reflect on Investec's decision to appoint a black CEO in a joint capacity with another CEO come October this year. His name is Fani Titi, and he has had a lot of experience at Investec already in his non-executive capacity. My question to you is it a bittersweet feeling that on the one hand, a black man in South Africa with the history that this country has managed to make this stride, but when the opportunity arises, seemingly he needs to be paired up with a white guy in order to run a major bank. This happened with Sim Shabalala previously, and there was a lot of hoo-ha about that. How do you feel about that? Because you've worked in the corporate sector, you know what the realities are.
I think what they read into this whole thing is that, yes, he's been with the bank, he understands the culture, but in a non-executive position. So they need someone, they won't say it, but someone to hold his hand so that he can be able to understand clearly. Then at some point, they'll allow him to run the bank by himself. Same thing applied to Zim. After some time, then he was allowed to run the bank. And in all fairness, a non-executive and an executive positions are two different roles, but the most important thing is that he understands the culture of the bank.
And the interesting thing yesterday was that even though financials closed down about 1.25%, Investec was up over 2%. So presumably that means the market liked that news.
By all means, and even today is continuing to go up in line with the other banks.
All right. Well, thank you very much for your insights, as always, Mr. Masilela. That was Makwe Masilela. He's from Makwe Fund Managers. More news with Nzinga after a short break.